Hey guys, I'm going to be talking about the most common mistakes I've seen people doing while they're trying to copy trade. So I'm just going to go straight into it. So the first one is actually probably adding either this guy or this guy. That's happening because users, especially the new users, don't understand the logic behind it. So for instance, this guy is a frag trading bot. It's a bot. How you see it, I'm not going to get into what frag trading is, but you can Google it. At least it's my assumption that he's a frag trading bot. So look at all these transactions. You can't copy trade this. By the time go into this position, he's already out of this position. So like you are not supposed to copy trade bots. Again, just Google what frag trading is. You will see what I mean. The second one, let's go back to the wallet. Then this wallet. This wallet is a delta neutral wallet. I forgot which uh, company it belongs to. I think it is something Labs. I'm not sure, but you can actually paste this wallet on Twitter and you will find out. But before you do that, Google what delta neutral means. So delta neutral is basically having the same position in different uh, directions on two different trading platforms. Let's say you are doing 25x short on Hyperliquid and 25x long on Binance. There are different use cases why you do that. One of them will be you want to uh, hold the perpetual value pretty much the same without protecting yourself from fluctuations. Another reasons is because that maybe you want to get a funding income because the funding rate of platforms differ from each other, so it's like an arbitrage almost. But anyway, so this wallet looks profitable, and indeed it is profitable. So if you had been copy trading it, like you would have been making money, but it is just practically shorting Ethereum. It's not really copy trading. I mean, people who have been copy trading it, I mean, it worked for them because Ethereum, unfortunately, has been going down. But I'm just trying to make you understand the logic behind it. So this person, if it is indeed a delta neutral trading bot or account, whatever, which I am pretty sure it is not doing this because they think Ethereum is going to go down. They are just doing it because they are applying a delta neutral trading strategy. So like you have to be doing a little bit of research. Even if you just put this on Twitter, you will see what I mean. All right, I will go to my own account now. This is my test account. I'm just going to go over the real metrics. So this is the dude I'm copying right now. I'm going to go over the wallet as well, but uh, let's go into the wallet details page. So you see, after 18th of March, I started losing a lot of money here on this account. And maybe you remember what happened on 18th of March. It was the latest video I recorded. That is when I started using this account for tests. So we were developing a new model called Method 3, and there were some cases that we had to test about missing fields. So we kept opening positions, trading, copy trading different wallets at the same time, closing positions, opening positions again. This is usually when the users lose most of their money. So the idea for me is whenever I copy trade a wallet, I am committed to their conviction. I can't really, you know, close the position each time they go a little bit on the minus side. People do that, they just get over obsessed with it, what's called hyper fixated on it. They keep looking at the PNL all the goddamn time, and then like they're at like plus $537, and tomorrow it goes to $380. They close all the positions, open all the positions again. Look, honestly, it is making us more money if you keep doing that if you keep opening and closing the positions, right? Because we are charging you fees on the whenever a position is opened, but it is not the correct way of doing it. If you are committed to a trader, if you had done your research, if you had gone through their history and their trades and their deposits and checked them on Hyperscan and made them sure that they're not a bot, and checked everything else here, then you can't be changing and closing and opening your positions all the time, because that is against the idea of copy trading. Then it becomes conviction trading. Then it's actually just looking at the other different traders, and then it is just uh, doing the trading yourself. This is the source wallet. Source wallet means the wallet we are copy trading. So as you see, like, there are ups and downs, right? So most people copy trading here panics and sells everything here. Then if they start here, they probably sell here. So I've seen people like changing their positions all the time. They say that the market turns around. Yes, it turns around, but it turns around again, and it will probably turn around again. And no wallet can be expected to be profitable 100% of the time. One thing you can look at is when you are searching, uh, there are the short PNLs and long PNLs, or the short win rates and the long win rates. What I try to do for searching for wallets for myself, I try to find wallets that are successful on both of the situations. So because sometimes it's the bear market, the market goes down consistently for 3 months, 5 months, a year sometimes, and sometimes people who are 100% oriented in shorting positions, they always seem in profit. But if a wallet is successful on both shorting and longing positions, it means that it is more likely that they are going to be successful when the market turns around too. Because as I mentioned, like, you might be a bear trader only shorting positions for a long period of time, and then once the market turns around, all of your profit is going to go away. However, if they know what to do with both of the market situations, it is most of the time easier for those kind of traders to adjust themselves once the market conditions change. One last thing, it is the margin usage. So let me show what I mean. This kind of good traders, they pretty much never, actually I should say never, there are some of them who uses high margin, but most of them at least don't use 100% of their margin, right? You see, I think this is an important identification of being a not greedy long-term trader, because it's actually it becomes riskier as you keep using your margin. So that's why, I mean, they also know how to use 98% of their margin, but they don't, right? Because they are looking at it in a long term. So one problem you are going to run into is, so when you are copy trading this guy, you will see some of the margins are really tiny. I mean, look at it. The values are here like millions of dollars, tens of that millions of dollars. 21 million unrealized PNL. It's crazy. $1 million. However, some of the positions are really tiny, right? Like, according to his size, like $6,000, another 6,000, $3,000. Not all of them are very tiny, but some of them are very, very tiny. You see, $7,000, $2,500. You see, so what happens is when you are doing copy trading with method 3, as you know, method 3 adjusts your margin and your positions to these traders' margins and positions. It's basically, that's why I call it mirror trading. So if they have a margin of $10,000 and one position of $1,000, when you copy trade him, and if you have $100, you are basically going to do the same thing with $10, because it's the same ratio. $10,000 to $1,000, $100 to $10. So this is where the issue actually starts. If they have something even smaller, you won't be able to open the position, because Hyperliquid only allows a minimum of $10 in position size. Any position size smaller than that, you can't create the position. It's not a rule that we apply. It's a Hyperliquid's rule. So if they have a smaller ratio, and if your budget is like $500 or like $1,000, it actually doesn't matter. If the budget difference is very big, your positions might be under $10. So that is where you have to be scaling up the margin usage. So in this one, I'm actually saying that, I know that this guy is using 20% of their margin, how much 24 point of their percent of their margin. But in order to create most of the positions here, I am using 300% scaling. So my margin usage is going to be, as soon as I run it, it's going to be 72%. If it is successful, then actually my percentage usage is going to go down because I will be relatively making more profit in terms of percentage. So I'm going to start with 72, then I'm going to go to 65, 60, you know what I mean, because I'm risking more. However, keep in mind that it also means that I'm risking more when the things turn around. If I start losing money, I will also be risking more and then I will get liquidated earlier than he gets liquidated. It depends on how much risk averse you are or not. However, this is a very important subject to understand while copy trading because it determines the risk you are taking. And like if you are copy trading a wallet with a huge equity, you might not be able to open all the positions. That's one thing you have to keep in mind. This is a little bit complicated here, but we are going to change it, make it more visible to everyone. If you have any kind of error that is in the system when you're copy trading, you can just go to tracker, wallet activities, and then copy trade, and then under you can see all the errors here. You see, this is exactly what I was talking about. So I was copy trading this guy. I wasn't able to open this TIA or TIA or whatever it's pronounced like position because my order was less than $10, and this is probably some profit left out. And you see, same happened with LDO as well. So actually, they were all yesterday. So he opened positions and I wasn't able to open positions because my margin usage wasn't enough. If my order was more than $10, then the system would have been able to open it. Anyway, I don't want to make the video too long, so I just wanted to give you a couple of observation of mine. I hope this is useful. Have a good one, guys.